Stocks, real estate, both work, both have created millionaires and also stress-induced eye twitches. So if someone tells you the one best way to build wealth, they're either selling a course or they're lying to themselves. So today we're going to tackle the big question. Should you build wealth by investing in real estate, or should you build wealth by investing in the stock market? And I'll go ahead and tell you, spoiler alert, the answer does not depend on your neighbor's Airbnb spreadsheet. Hey everyone, Tommy Durfler, Sam Rice here on the Lighthouse Wealth Group Spotlight Podcast. And today, we want to talk about the differences between building wealth in real estate or building wealth in the stock market, or, a little bit of both. And so I'm going to kick us off with just talking about the stock market here for a second. And a lot of times this could be the most misunderstood, emotionally, abused wealth building tool on the planet. And so a couple of reasons why people do invest in the stock market, or a mixture of the stock and bond market is, first off, you have liquidity. You're investing in public companies. You can buy one day, you immediately sell the other day. It's very marketable. It's very liquid. Real estate's a lot more difficult to do that, and so people like that liquidity. A lot of times with the market and whether it's mutual funds or stocks, is there's low effort, right? You don't have to do anything. It's very easy. There's no tenants, there's no midnight the heat's broken or anything like that. You historically have really strong returns and long-term compounding returns win. And so I think it's really easy for people to say, hey, listen, I can invest in something. I don't have to manage it. I don't have to take care of it. I don't have to, have my phone available 24 hours in case a tenant calls or whatever it may be. And if you consistently invest, you reinvest the dividends. And you're playing a game that rewards simply patience. And so for a lot of folks, they like that idea, right? The problem a lot of times with the stock market is, people think logically, but they actually act emotionally. And so when, you have a downturn in the market, people can then start making the wrong decisions and selling out when the market's low. And so that becomes really hard for people to say, hey, when the market's having a 20% decline, you've really got to hang in there and stay with it and not react. Because I think as human beings, the first thing we think of is, if something's wrong, how do I fix it? How do I fix it? How do I fix it? And so a lot of times with the market, when you do have these 20% downturns, the best thing to do is not to do anything and stay patient. In fact, more mistakes are made by trying to correct it, rather than just waiting these corrections out. And so, the beauty about this is the stock market, it doesn't require you to be brilliant, right? It requires you to be patient, and it rewards you based on your patience and how you handle these certain declines. And so that just requires discipline. And, discipline is apparently harder than calculus a lot of times. And so the case for the stock market is simply, it's very low maintenance to some degree, and, it's very flexible, liquid. You can get out of one account or get out of one fund, get into another fund very easily. And so, that makes it very attractive to a lot of people. But on the other hand, you have real estate. So Sam, talk to us a little bit about, why people like real estate and the case for real estate.
I think, and as we spoke about, both are viable options. But I think some are maybe marketed a little bit differently online with different courses and what have you. With real estate, I think two of the biggest benefits that are viable options that are really appealing in that space are the fact that you've got the ability to have leverage and have depreciation. So, and on top of both of those things, ideally you have price appreciation or rent appreciation, that kind of thing. So it's, in some cases, it's kind of like a triple threat. The flip side to that is, if you ever speak to anyone who really has a portfolio of rental income properties, it's never actually a passive income stream. It's, as you said before, do you like having your phone on speed dial for anyone who's renting to you, or even a property management company that you may have to, give 10 or 20% of your profits to? That's the reality of a lot of this. And so, yes, I think, while some of these people have created wealth through this way, the leverage, it's a big risk for a lot of people.
Yeah.
It sounds great, right? If you put, say, 10% down on a $500,000 property, you're only putting $500,000 or $50,000 up. You can get depreciation. Hopefully, you can get some rent appreciation. But with all that being said, do you really want to be monitoring those people for tenants coming in, tenants coming out? The time that takes just managing the property, any repairs on that property that you're not only potentially doing yourself if you're trying to save money, but paying other people to do just because it's more convenient. So there are ways to make it work, and I think it takes a special type of investor to really make that commitment. And I think that's where that passive versus people that are really specialized in this area are the big differentiators, because it is nicely marketed to a lot of people to get into the, either, as you said, Airbnb space or rental property space. But again, although there's leverage involved and you may be putting a small amount of money down for even, say, $500,000 property, if those renters at the end of the day don't make their rent or they move out, you're on the hook for that mortgage for $500,000. And I think a lot of people are lost on that aspect of that. It's a business, right? It's much more labor intensive than many people think. Although it's not right or wrong, but people just need to know understand what they're getting themselves into.
And I think
as we said here,
real quick, as I talk about this,
Yeah.
As I think about this, when we have people come to us and say, "Hey, I really want to invest in real estate," I think the biggest case for it is the fact that people want to have an influence over it, right? They want to see it, they want to touch it. They say, "Hey, this is something tangible.
it's a physical thing.
It's a physical thing."
Yeah.
Right? Or,
Yes.
"Hey,
That's the appeal.
I want to be able to influence the market value, so I'm going to do a renovation, or I'm going to, redo the kitchen, the bathroom, the master suite, whatever it may be." And so in their minds, whether right or wrong, you don't know until you go to sell, but in their minds, they're thinking, okay, I have an influence over this.
Yes. That is the huge difference.
Or maybe just, a desire. People say, "Hey, I'd rather quit my real job and just do this." And so I think, if you want to be very hands-on with it, then that is for you, right? You'd want to be able to have influence. You're not going to have that with stocks, bonds, or mutual funds. You're not going to be able to have the influence of, "Hey, I want to make this company better, but I'm not an employee there, so I can't really do anything."
Yeah.
Yeah.
No, it's definitely more of a commitment. And I think that, again, that's one of the things that people don't talk about as much. That's the uncomfortable truth. And if you want to talk a little bit more about, some of those, maybe the risks with real estate that, as we talk about all of the investment avenues, you got to talk about the benefits and the risks.
Yeah, so if you evaluate the risk on both sides, let's take the stock market first. The risk is there's volatility there. You get your statement typically every month, and you see the value on an ongoing basis. So you get to see when things are great and not great all the time. You don't get that with real estate. You just don't. If you, I tell people all the times, it's like, hey, if there was a statement that showed the value of your real estate or of your house or whatever, maybe daily, you would probably see some fluctuations depending on what was going on, right? If there's theft in the neighborhood, guess what? The property value is probably going to go down a little bit. Give enough time, it'll come back. And so there's all these little nuances, but the fact is that, with the stock market in general, you're going to get something that shows you daily price fluctuations. And that can be a dangerous to people that don't understand or don't have the patience to hang in there, right? The other thing is just the emotional whiplash and headline risk. So with this is all kind of in the same vein of all this information be readily available. And so that's what makes it difficult because, on one end, you could ride the emotional roller coaster and, if the market's doing really, really well, you're thinking, this is great. I can retire early. I can go out and buy this. I can do that. You kind of already do this mental accounting in your mind, right? And then, if all of a sudden there's a pullback, your mind goes from that, I can do X, Y, and Z to I can't even afford A, B, and C. What am I thinking? And so it could be kind of a dangerous ride if you don't understand the idea of, listen, this is great. You're going to have these fluctuations. Don't be inclined to be impulsive to do something that could really mess up your long-term plan. And so I think those things
and lock you into something.
Exactly. Whereas with real estate, we talked about it already. Leverage can work for or against you. And a lot of people always say, well, real estate never goes down. There's always, the population is growing, so there's always going to be a need for land. And yes, from a 50,000 foot view, that's correct. The problem is there's still fluctuations in the meantime, right? There's still situations where, you've seen different part of the countries have hot and not so hot real estate markets. And sometimes the real estate market won't affect your situation. Like you talked about earlier, you could lose a renter, and guess what? You're highly leveraged and you still have to pay that mortgage. And that a lot of people don't really think about these things, until these things happen, or you could have a lot of unexpected repairs. The HVAC goes out, that's a pretty penny, right? And so
a year's worth of income, like your year's worth of profit right there.
Yeah, wiped out just from, having to make a repair that was very unexpected. And then, of course, the illiquidity. So you can't just decide to say, hey, we want to go ahead and we've got 10 properties. We're in a little bit of a cash crunch. We need to go ahead and sell maybe 3 of them. Well, that could take anywhere from, 4 to 16 to 30 weeks to do that. And it's not just that easy. And it's great to have, a great net worth statement, right? Where you can look on paper and say, man, I'm worth a lot of money. But at the same time, that money's not always readily available to you when you want it. And so you don't have that option just to say, hey, I'm ready. I want the market to be ready. So sometimes those things are at odds with one another. And so it's just a different way of kind of seeing these risks. And, I think where people go wrong is they see these shows, HGTV and all these things where, this couple buys a property and it's, they have a certain budget. And then all of a sudden they think, oh, this is great because we'll buy this property, we'll sink X amount of dollars into it, we'll flip it, and we'll, make these great rate of returns and this profit. And it's like, yeah, that could happen. May not happen.
If you know what you're doing.
Yeah. And so, people fall in love with that idea of, hey, I just watched this 30-minute television show and it makes it look so easy. And then we could have to remind people reality of, hey, this is selling viewership here. and they're never going to sell. They're never going to show the properties that they went under or things didn't work
Yeah.
out.
Well, I will say they just came out with. I remember seeing this a year or two ago. There is a new show. It is some real estate person comes in for the people that did try and do a flip, and they are about a year into it and underwater, trying to get saved themselves. So there is now that show.
Okay, there you go then.
Yeah,
That might help educate
It's
the
not
public a
all
little bit more.
pretty.
Exactly. And so, again, without getting into the right or wrong, I think people don't really understand the risk, and they should with either investment building tool.
Yeah.
So whether it's you want to go into real estate, that's great. Just know what you're getting into. Know that, hey, unexpected things could happen. If you start building wealth by using the stock market as the engine, great. Just understand that you're going to have patience. You can't be an impulsive person and do extremely well by doing that. It doesn't work like that. So with all that being said, a lot of times you talk to day traders and, in our industry, wealth advisors. And, the tool that we typically use to help people build wealth is obviously going to be the stock market. You talk to people that are in construction, real estate agents or realtors or whatever it may be. If you talk to people in that industry, they'll say, yes, this is how you can build great wealth. So Sam, what is the question you really should be asking at the end of the day?
And neither one are wrong. That's the thing. Do you want to be active or passive in your involvement with your investments? I think is one of the biggest questions, and understanding the flexibility of where you're putting your money. Because again, people have done well in real estate. People have done well in the stock market. But understanding the ins and outs of those both avenues is key, because I feel like whether it be one or the other, people tend to jump the gun in a lot of cases. And whether it's there could be volatility in the stock market, there could also be volatility in the real estate market, right? We've seen a tremendous growth over the last couple of years in real estate prices, which I'm sure have enticed a lot of people into going into all sorts of real estate investments, developments, what have you. But on the flip side, right, we were all around for 2008 when real estate markets, the thing that could never go down, kind of collapsed. So, and you saw a lot of people, get exposed with just, again, as you talk about leverage, everyone look this up, leverage, just being overextended with loans, that kind of thing, thinking it's a sure thing. But at the end of the day, if something goes down, you can't sell it, you're still on the hook for that. So caught a lot of people with their pants down in 2008, and I think they've made a lot of progress in just the understanding people's requirements for obtaining loans and stuff like that. But just understanding just the ins and outs of either one is really important in doing your due diligence on your strategy that you're trying to move forward with, because again the best wealth building strategy is the one that you're involved with, that that you're familiar with, and the one that you're going to follow, whether it's both one or the other. But just being understanding of your situation.
If that's the case, what are some questions anybody should ask themselves specifically before they dive into one or the other? You know what I mean? Like, what are some key questions that you should be asking yourself?
Some of the questions you should probably ask yourself, well, thinking about which one to go down, or if both make sense for you, or just if I want to be passive in my involvement, if I want to be active in my involvement. Right, as we've come to find out, real estate is not actually very passive. It's actually involved. You have to deal with tenants. You have to deal with repairs. stocks potentially have potentially more volatility, but they are more they are less active in their involvement in the day-to-day necessities of just you as a person, or essentially as a business owner. If you're a rental or landowner, you are essentially a business owner. If you're collecting rent on that. If you want to have flexibility or control, a lot of people do like the fact that real estate in their mind has control because it's a physical asset, and stocks, you're beholden to the market. We know the long-term averages of being long-term investors, but within the day-to-day, there's fluctuations, sure enough. And then again, along with that, just understanding the complexity and volatility of either one of those investment avenues. Right? Are you thinking about buying a single family rental income property? Are you thinking of getting invested in a multifamily property of a apartment complex or a couple duplexes? Or are you just putting your assets with a wealth advisor or investing on your own in the stock market? Just getting the full picture of your situation and not diving too deep too quickly is kind of the best questions I would poke and prod with any situation that you're involved with.
That's great. Okay, I like it. So, here's the truth about this. There is no one way to do it, right? It doesn't have to be this versus that. The stock market versus real estate investing.
Correct.
It doesn't have to be that way. And, a lot of, I think, the most financially successful people have done both. They use the stock market for long-term growth and liquidity, but they also use real estate for income, leverage, and tax efficiency. So it's not this either or. It's really more of a when, how, and how much. And so it's not, wealth isn't built by picking sides. It's built by building systems. And, I looked at, what I did is I looked up and said, okay, let's look at the top 50 billionaires. Let's see what did the top 50 richest people in the world in 2025, do. And basically, the majority of them built a private business and then went public, And so a lot of it was obviously technology in that industry, just because there's a huge amount of upside with that. But luxury goods, investment companies, where, interestingly enough, there wasn't a real estate mogul in the top 50 of the richest people in the United States or in the world right now. And so, but, on the other hand, people have both. So even the most successful, financially successful people still own real estate property, right?
That's right.
I think that's why it's our job to help people, educate people into what they're getting into. The worst thing you could do is just watch something on TV and say, I want to do that, now I want to start doing that. That's what we don't want to do. We want to be able to educate people and saying, hey, if you want to get in real estate investing, tell me why. What do you enjoy? What is it that's attracting you to this?
Who have you talked to?
Who have you talked to? What research have you done? And so by having those conversations, a lot of times it'll come out and say, listen, there's more to it than that. Before going into this, I would research maybe, or I would think about X, Y, and Z in your situation. And, the same thing I think would be prudent, investing in the stock market, is we want to educate people and say, hey, here's how this works. We're typically going to use stocks, bonds, and mutual funds to invest and start building your wealth as your wealth engine. Here's how these things work. Here's what happens. Here's, these things can go down. You're going to get a statement. You're going to see fluctuation in this. Remember, you're always rewarded by your patience with the stock market. And so it's, real estate really rewards involvement. Stock market really rewards patience. Both can punish your ego. But the goal isn't to win an argument at a dinner party. The goal is really to have freedom, optionality, and allow you to sleep at night really, really well. And so, if you're trying to decide which path makes the most sense for you, that's where real planning comes in, right? And so, because at the end of the day, the market doesn't care about your opinions, and neither does a tenant with a leaking sink. And so,
yeah, that's right.
There'll always be this back and forth between real estate and the stock market. And, as for us and our team, the real thing is just giving you education on both and making sure, hey, before you make a decision, do you know what you're getting into? And if the answer is yes, then yes, both are great wealth building tools. So, but with that being said, we're going to go ahead and sign off. Thank you. Please don't forget to like and subscribe, share with a friend. And as always, we will see you on the next episode. Take care.